Welcome to the Market Matters weekly video update for Thursday, the 7th of April. I'm Harry Watt here, joined with James Garish. It's the first video of the month, James, actually the first video of the quarter, if you want to put it that way as well. So, we're going to run through performance as we always do. We've got 5 portfolios in the deck. How do they all fare? In a pretty strong March month, actually, the ASX did really well in that month.
It was the strongest March since March of 2009, so that gives you some context around the strength in the ASX. The market was up about 6.8% in accumulation terms through ASX 200, so a hugely supportive backdrop. We came back, and you look at the quarter we've just had, the market traded in a huge 10% trading range. So obviously January was a really tough month for equities. We got hit by this confluence of rising interest rates on inflationary outlook, the invasion of Ukraine by Russia amplified that move, and equities really sold as a consequence of that. But the market's had a really strong about turn and rallied quite significantly, particularly when you think about the context of where interest rates have gone. So which have been, we've had the biggest decline in bonds, in bond prices, which means the biggest increase in yields in 50 years over the last 3 months. So that gives you some context around the backdrop we've been dealing in. Flagship growth portfolio had a strong month, up 6.58%. The income portfolio was up 4.25%. Bear in mind, this is a portfolio that has some equities and some fixed income securities. Emerging companies that you run was up 6.68% for the month. International equities were down 2.26% for the month. Over 3% of that was to do with the rise in the Aussie dollar, so the negative influence of the currency. So the portfolio was up marginally if you strip that out. And it's also important to note that international equities underperform significantly the ASX. That's to do with the composition of our index. So, and then our final portfolio, the macro ETF portfolio, was up 2.84%. Does what it's been continuing to do. So, I sit back and say, March was a successful month across the portfolios, supported by a strong equity market. But we navigated the complexities of the last quarter pretty well, I think, Harry.
Definitely. We took some profits, cycled out of a few things, particularly in the growth portfolio. We had a number of changes in March. James, do you want to just run through what we took off the table in March?
Yeah, we were active in our flagship growth portfolio in the month, and I think some of the plans that we put in place 6 months ago started to play out. So and that was largely across the resource space. So if I had to pick out one big call that we made in March, we went from our overweight position in resources to underweight resources. We took profits in Whitehaven Coal. We took about 150% profit in Whitehaven Coal, just above $4. It's slightly above that price today. We took some profits in Oz Minerals, Alumina. We sold out of Santos into Strength. So all of those things sort of, we didn't buy these positions in January for the, when inflation really rocketed. We'd held these positions for quite some time, and what happened, the unfortunate situation in Ukraine has amplified some of these moves in commodities, and commodities often peak on news-driven highs, and I think that's probably the case this time round. We're not negative on commodities by any stretch. We're bullish medium term in the commodity space. Tactically short term, we think there's going to be a pullback, so we've lightened the load. We've still got some exposure in the space, but a reasonable amount of selling in that area of the market.
Definitely. We did take some of that off the table and leave some in cash, but obviously some of that money found it back into the market within those portfolios. James, what did we add in March?
Yeah, we did increase cash a bit. So cash in the flagship growth is sitting at 9%, which is pretty, reasonably high for where we've been in the last couple of years. We've been pretty much fully invested over the last few years. So we added to some existing positions and tightened the portfolio up. So we went from around 21 positions down to, we've got about 17 positions in the portfolio now. So that means we've added to some existing positions. Xero was one we added to. Goodman Group was another we added to. Into weakness, we added to Altium. So, really going out there and sort of looking at our highest conviction bets for now. and adding to those highest conviction bets. Just on that tech trade and the higher value growth trade, we are bullish in the short term. I know that's a very counter consensus call. We think a bounce will play out in the short term. If a bounce plays out there in tech in the short term, and we get some reversion towards the mean in the commodities complex, then we'll be switching back. So we think this year is going to be a year for active investors. That's us. Hopefully it plays out that way, and we can book some really strong portfolio gains.
Definitely. Speaking of being active, where do we see this market short term? I think you sort of allude to a few things there with our overweight tech call at the moment. Do you see this playing out for the rest of April?
So short term in the market, I think the market's run pretty hard in a reasonable amount of, in a short amount of time, in the face of really strong bond yields. I think two things I'd point out, and we've written about these recently: the appreciation in bond yields has slowed. So the rate of change in bond yields has slowed, and when markets get sold off, there is obvious buying coming into it in the equity space. So I think markets remain bullish. I think all that technology space needs is a pause in the appreciation of bond yields. So which I think is starting to play out. In the short term, we're down on the market today. We were a little bit lower yesterday. I think there'll be a pause, in the next week or so. But I think April, as we've written about it at length, is a very strong month for equities. I think that'll give us an opportunity to probably lighten the load a little bit further in equities going into the back end of April, ahead of May and June, which are seasonally weak. So that's how we'll be playing it, Harry. We're still bullish here, but we'll probably get a little bit more conservative in the back end of May, early June, and look to reposition portfolios more defensively from there.
Definitely. We're only about 200 points from all-time highs on the ASX 200, James. It's only 3% away, which is incredible given the backdrop of where the markets are and what they've been dealing with over the last few months. So time to stay active and keep an eye out for these Market Matters reports.